Okay, what I want to look at is the 2018 October question 6, which is on a cash flow statement. My very first thing that I'm going to do is I'm going to write out my template to answer this question. So I'm going to start off with my cash flow from operating activities. So I put in my profit before interest and tax. I'm going to add back my depreciation or my amortization of, let's say, intangible assets, because depreciation is not a real expense. I will adjust it for if I have a profit or loss on disposal of a non-current asset. So if I sell an asset, a car or a building, and if I make it a profit or loss, I'm going to adjust for it here. Why? Because it's not necessarily a cash flow item. I know I will receive cash in terms of physical notes, proceeds, and I will include that later on in the question down here in the disposal of PPE. For the moment, the profit or loss is adjusted. It's adjusted up here. I then take away or I adjust for the movements between the increases and decreases in my current assets and current liabilities. So that's really going to be my movement in my stock, in my trade receivables, the people who owe me money, prepayments as in some questions, and trade payables. I will also include a line here for interest payable. This is my finance charge, not what was paid, but my finance charge in the accounts. It is possible to do it to do this question in two ways. One is the only difference really is I start up my profit before interest and tax, and I adjust it for my interest. Whereas some solutions will start off with your profit before tax, and they won't adjust it for your interest payable. I will explain it later. But I would stick to the methodology currently on the screen because it'll help you. Number one, it'll save you doing adjustments, and number two, you will have an approach if you are asked the question in an alternative manner. Okay, I'll take off my interest paid and taxation paid. They are not necessarily the numbers in the accounts. We do need to adjust for them, and we do need to actually work them out. Your solution or the way you're taught is probably to do with the accounts. I'm not going to use the accounts because it is simply adding an extra level of complexity on calculating the numbers. I have a different approach which I'm going to use, which I think students find a lot easier than trying to do T accounts in addition to this cash flow question. I then look at my cash flow from investing activities. So if I buy any equipment or PPE, if I receive a capital grant, if I dispose of assets, that's where my proceeds, my cash proceeds. Remember, keep going back to what are we actually doing? A cash flow statement. Money in, money out, really. Interest received is going to pop in here. And if I get any dividends. My final element is looking at cash flow from financing activities, so looking at dividends paid or loan received or loans repaid, or maybe I issued some shares. There's going to be, if some of these come up, there's going to be notes in the account. Okay, so taking a look at the question, I have below is an extract of the income statement for Bennett. So I start off with sales and cost of sales, and I do have profit on sale of plant, so I am going to need to actually include this up here, profit and loss or disposal. But what the challenging point is going to be, it's going to be to work out what my actual proceeds were, because I know the profit but I don't know the proceeds, so it's a small little working. I got some depreciation costs, my finance cost is my interest, and I get my profit before tax. Looking at this balance sheet or disabled financial position, I see my non-current assets, okay. So I didn't buy or sell any land, I don't think. It hasn't changed in value. My plant and equipment, okay, I bought some, so we're going to have to account for that. Movements in my assets, okay. My share capital have gone up. It's gone up by about 250. So is my premium, which we'll have a little look at. Loan notes, I repaid a loan, so it's going to be money out. Taxation and so on. There are 5 little notes, which we'll start with. So, to actually start the question, my first point of call, I have written out my pro forma computation. There are people. I had a guy who his name was Paul. He was in Tala, IT Tala. He could never remember the layout, so it was. We made up a little mnemonic. I think it was Paul. He talked about dinner a lot. I don't know why. Paul did dinner in really posh places. Then there was in Ireland, and then it was IT Tala. So, and then Aidan did, and then DLLS. It's talking about the delivery company, I think it's DLS or something. But that was a little mnemonic that we made up. So it's an easy way. So when you walk into the exam, the first thing you're going to do is write out your pro forma computation. You have your story in your head. Paul did dinner in really posh places in IT Tala. Aidan did DLLS. Full stop. So you now know that you can. There's no need to sit down and try and remember all of that. You have it in your short-term memory. So step 1, write out your pro forma computation. Step 2, I would look at my adjustments and I would deal with the notes first. In June, an interim dividend was declared, and this was paid in July. Okay. So dividends come out of my retained earnings. So my dividend would have been deducted in my retained earnings, somewhere between the 80 and the 196. So if I just make a quick summary of what was actually happening. So I have got my opening, make sure I have the right year, my opening retained earnings were 80,000. And my closing retained earnings were 196. So I've got opening retained earnings were 80,000. My closing retained earnings were 196. So my opening retained earnings were 80,000 in the question, which is here. My closing retained earnings were 196. My closing retained earnings were 196. The difference between the opening and closing, well, I put in what are retained earnings, they're accumulation of all the profits and losses generated. So I did make a profit in the year. My profit was 178. So how did I get from 80 plus 178, which is 258, down as far as 196? I would have paid out a dividend. And so that is going to be my dividend paid, which is the balancing figure, which I think is 62,000 minus 62,000. And so that is going to be my dividends paid, or my interim dividends paid. And if I just check it, 80 plus 178 minus 62 gives you 196. So that's how I get my closing figure of 196. So I've got dividends paid, interim dividend paid, note number 1 of 62,000. Pop it in. So dividends paid, it's going to be, don't forget, minus sign 62,000. Okay. Note number 2. On the 31st of December, 10% loan notes were redeemed. So I'm looking at my question and I'm looking at my loan notes, and it says that they were 40,000. I repaid them during the year down to 0. So loan repaid is 40,000 euro. So it's obviously money out. Loans not received, loans repaid, is going to be minus 40,000. Note number 3. During the year, plant with a net book value of 50,000 was sold. Okay. So I don't really know what's happening here. I just know that I've sold some plant and it was worth 50,000. So if I look at my workings and I just say disposal of plant, please ignore spellings and typos. I'm not trying to make this perfect. So I sold something, so I got in some proceeds. which I don't know how much it was. I sold it. It was worth 62,000, I think. Excuse me, 50,000. The net book value was 50,000. And I know that in my question it told me I made a profit on the sale. So I sold something. I made a profit of 12,000. So profit is 12,000. How much money did I get? I would have received 62,000. So if I got 62, it was worth 50. I made a profit of 12. So you see my point in, you could do this by doing disposal accounts and looking at maybe looking at depreciation and looking at your bank and your multiple T accounts. If you just break it down, I made a profit of 12. It was worth 50. So therefore I had to sell it for 62. So what I'm going to do with that 62 is just pop it into my question. Proceeds from sale of PPE. It's going to be in cash flow from investing activities. So disposal of PPE, I got 62,000 and it is a positive number. Okay, so looking at my next note, which is note number 4, and it says on the 1st of October, the company issued €1 ordinary shares at a premium. Okay, well we kind of knew that from looking at the question, because it's kind of implicit. It's gone from 700 up to 950, and there obviously was a premium in it. So the amount of money that I raised, the difference between these two figures, is going to be my share, the increase in my share capital. So for completeness, I'll just write it out anyway, but I would, in the exam, I would just make a little note. It would be 700 plus 270, and I'd add 950 and 364, and the difference is your answer. But for the purpose of this and explaining it, I will do an. So my ordinary share capital was in the question. I've got opening of 700 and 270, 700 and 270. My closing is 950 and 364. 950 and 364. The balancing figure is obviously what I received. So I got in 250 plus 94 is 344. So I'm going to pop that in my cash flow is 344,000, and it is going to go in the area of issue of shares as plus 344,000. Okay, my last point I think in this question is looking at something small. Trade and other payables at the end of 16 of 94,000 includes interest due of £2,000. Okay, so my trade payables down here, that included £2,000 of interest due. That's all. I'm not even going to write that out. It's written there for me. I just need to bear it in mind when I'm looking at my question. Okay. So can I pop in, I'm just going to hide this again, can I pop in and put in any of the numbers? So my profit before interest and tax is profit before interest and tax, which I might call my operating profit, is 197,000. Do I know my depreciation? Well, it's given to me in the question. Depreciation on the plant and equipment is 188. Let's add it back. My profit and loss on the disposal of a non-current asset, it's a minus, it's a profit, it was 12,000, and that was told to me in the question. Profit on disposal was 12,000. That's where that goes. I need to look at the movements in terms of my inventory. So my inventory, it was 144, and it's gone up to 212, so that's an increase of 68,000. So put in 68,000, it's an increase, so it's going to be a minus, so it's minus 68,000. Do the same for trade receivables. It was 94, it's gone up to 170, that's an increase of 76,000, and it's a minus again, minus 76,000. My prepayments, well, there were no other current assets. You do not put in cash. That is your balancing figure. That is the correct answer. but no prepayments. And you need to look at your trade payables. So down in my trade payables, they were 94, but they weren't really, because there was £2,000 we just mentioned in terms of interest. So take away 2, there were only 92. So there were 92, and they fell down to 76. That's a reduction of 16,000. So it's a minus 16,000. Okay. Interest payable is always just given to me in the question. It's just the finance cost. It's going to be 4,000. Okay. So I should have started with my profit before tax. So if you start with your profit before tax, it's 193. And I'm going to put in the 4 here to give you the 197. If you start with your profit before interest and tax, you're going to start with the 197. So it doesn't really matter which one you start with. If you start with the 197, you're not going to add back the 4 down here. If you start with the 193, you will add back the 4. I would do it that way. I would start with your profit before tax. Okay. I've got no income. I would have seen income down here and added to the operating profit. There is none in this question. So I'm going to add up all of the sum. So it's going to be cash generated from operating activities. It's going to be 213. Tax paid for the moment. So again, we use T accounts, but I don't. I just do a working. We're going to call that working 4. It's going to be taxation paid. And the way I'd like you to remember this is you start off with an opening balance. You have a closing balance. And something happened in the middle. There was a charge. So I got charged interest, or I got charged tax, or I got charged something. So I'm going to have a charge. But remember what we're looking for. We're looking for what was paid. So it's just going to be the balancing figure. Just pop in the numbers. And I'll show you where they are in a moment. Okay. So my opening balance on tax. How much tax did I owe at the start of the year? I owed 132. How much did I owe at the end of the year? Sorry, I'm reading the wrong line. How much did I owe at the start of the year? I owed 38,000. And how much tax did I owe at the end? Was 50. So my opening balance, 38,000. My closing balance is 50. How much was I charged in tax during the year? Well, that's in my income statement, 15. I was charged 15,000. Therefore, how much did I pay? So it'll be 38 plus 15 I owe 53. But at the end of the year, I only owe 50. So my balancing figure is what I paid is €3,000. Tax paid in cash, €3,000. So the taxation paid is going to be €3,000. So what we just do, we pop it into our calculations. So tax paid is going to be minus 3,000. Interest paid, I will do the exact same working, except instead of calling it tax paid, I'm going to call it interest paid. So I'm just going to copy and paste it down. So I'm going to note working 5, and it's going to be interest paid. And my opening balance that I owed at the start of the year was, looking at my current liabilities, 0. It's not there. So therefore I have my opening balance is 0. My closing balance that I owed is 0. So I pop in 0. Closing balance is 0. What was my charge in my accounts? Interest payable for, finance costs of 4,000 was my charge. So therefore I've had to have paid 4,000. So I knew by doing this that I've wasted my time. I didn't need to consider my opening balance. I didn't need to consider my closing balance because there was none. So I'm still going through the workings. I have an approach, and that's what I'm doing. So it's minus 4,000 is what you paid. Net cash flow from operating activities is going to be the sum of them. I'm not worried about the totals right now. Okay. So where are we? We're looking at my question, and we're seeing, is there any other numbers? So I'm just going to look around and I'm going to start with land. So I see there's no movements in the land. Okay, we didn't acquire anything, there was no notes on it, so it's fine. My plant and equipment, there will be a note on that, and again I'm looking at my opening balance of 740 and my closing balance of 1050. So sorry, my land and buildings, my opening balance is 740, my closing is 1050. So if I look at the question, I have 740 and 1050. How do I get from 740 to 1050? Well, I need to account for my disposal. And my disposal had a net book value of 50,000. We were told that earlier. Net book value of 50, so that will reduce down my value. And we had depreciation in my accounts of 188, that will also reduce down my balance. So what I'm saying is that my assets had a net book value of 502, but yet the closing value is 1050. So the question, how do I get from 1050 to 502? It means I buy more assets. The difference is 548,000, and that goes into my question. That is what I paid on the acquisition of PPE. So I'm looking for it. Acquisition of PPE is minus 548,000. Okay, I'm still going through the question. I've dealt with my inventory, I've dealt with my receivables, I've dealt with my shares, I've dealt with my premiums, my retained earnings, I included my loan notes, trade payables I dealt with. I think I've dealt with most of things, dealt with my taxation paid. So I'm just going to look at the question and go, is there anything there in the question that I haven't included? There was no capital grant, no interest, I didn't receive any dividends, net cash flow from investing activities, let's pop it all up. It's going to take the sum of it. Dividends, I didn't receive any loans, issue of shares, so I have no missing items. Just looking through the question to see if there's anything I missed, and I forgot to include the 2,000. So the interest due on the loan notes was 2,000, and I obviously paid that because there's no interest due. So if there's nothing due at the end of the year, then I've obviously had to pay it. So my interest paid up here is actually going to be 6,000. It's going to be the 4,000 plus my 2,000, which is 6. So I've got a net increase or decrease in cash. It's actually a decrease. It's minus 40,000. How can you check it? How can you say that you're 100% correct? Well, if my cash at the start of the year was 44 and it's now 4, it has had to gone down by 40. So it's just a little easy reconciliation. So it was 44, it's now 4. The difference is going to be your 40,000. That's how you account for it, and it's going to be a difference of 0. Okay, I'll have a quick look at the solution and just see kind of how they do it, and I'll just tab them off or mark them off as I see them. So your profit before interest and tax. Remember I said that there's 2 ways of doing it. I started with the 193 and I included the 4, so it gives you the 197. They just start off with the 197. I've got the 188 was the depreciation and the 12 was my disposal. The 188 and the 12,000. I've got my movement in my inventory is the 68, 76 and 16, or 68, 76 and 16. That's dealt with. I've got my interest paid, which was 6 and 3. If I pop in my my tax paid was 6 and 3. Acquisition of PPE, again, is a note, is 548. And I had my disposal, which was 62. Now, they're not putting in the areas that are blank. I just done it as a pro forma, just to keep it on its own. I have my dividends, 62. My repayment of a loan was 40, 62, 40, and my shares was 344. 344. You can see there was 6. There's 4. There's a 1 mark for that. I just marks all the way around, no matter what you're doing. My answer was 40,000, which was your 40,000, and then that was just a little reconciliation, showing me the difference, showing me that you're 100% right. Even if you weren't right here in the exam, the 40,000, you still get a mark by putting in your opening and closing cash balances, even if they don't agree. Okay, that's the calculation of it. So that's really the question. There is a little bit of theory looking at what did the theory ask me. It's looking at the definition of cash and cash equivalents. So it's usually cash is usually liquid assets. It's usually investments held, I think, within that you can convert into cash within a 3-month period. Bank overdrafts will be included. So what the solution is saying, cash on hand, short-term liquid investments that are readily convertible into cash. It's 3 months. So it's 3. Yeah, we're mentioning 3 months. There are only a couple of points. It's kind of theory. Okay, I'll leave that question there. You can see what I would suggest you do is to have a practice of this question, have a practice of a previous one, learn off your workings. I'll leave that out for you. I will email you this. I don't like the brackets, the minuses. I usually put brackets in, and I will email you a copy of the workings. Okay, any questions, just shout at me. Note.